Good morning. I'm Peter Milios from the Finance News Network. The S&P 500 and the Dow Jones Industrial Average ended Wednesday near the flat line, but the major averages remain on track for their biggest monthly gain in 2023. The S&P 500 and the Dow are up 8.5% and 7.2% respectively in November. The Nasdaq has climbed about 10.9% over the same period. Overnight, the 30-stock Dow was up 0.04%, the S&P 500 ticked down by 0.09%, and the Nasdaq Composite slipped by 0.16%. General Motors shares popped about 9.3% after the company announced a $10 billion buyback and raised its dividend, and NetApp soared 15% on an earnings beat. Phillips 66 stocks jumped 4.3% after Elliott Investment Management took a $1 billion stake in the energy company. Salesforce beat earnings expectations in the third quarter, with earnings per share at $2.11 and revenue at $8.72 billion, meeting LSEG's forecasts. The stock rose 5% in after-hours trading and has gained 79% for the year, outperforming the Nasdaq's 36% growth. The yield on the 10-year Treasury note fell below 4.3% for the first time since September, lending support to stock valuations. However, US bonds are on track for their best monthly performance in almost 40 years, with the Bloomberg US Aggregate Bond Index rising 4.3% in November, driven by expectations of federal rate cuts next year. This could prevent a 3-year losing streak, an unprecedented event in its 47-year history. The US dollar hit a 3-month low as confidence in the US Federal Reserve's potential interest rate cuts by mid-2024 grew, with Treasury yields falling. This decline was fueled by remarks from Fed policymaker Christopher Waller, suggesting that rates might not rise further and could be cut if inflation slows. Data released on Wednesday showed gross domestic product in the third quarter grew at a stronger than forecast annual rate of 5.2%. The boost came primarily from revisions to government spending and investments in non-residential structures. Traders have been optimistic that the Fed's rate hiking cycle is over, with Fed funds futures pricing reflecting a chance the central bank could cut rates as early as next spring. The influential Organization of Petroleum Exporting Countries and its allies, collectively known as OPEC+, convened to decide next production policy steps on Thursday in a postponed virtual meeting overshadowed by conflict in the Middle East, internal disgruntlement, and the imminent expiry of a key Saudi supply cut. All eyes have turned on whether the OPEC subset of the group, steered by heavyweight Saudi Arabia, will have amended its differences after sources told CNBC that Angola and Nigeria objected to the lower baselines for next year. Baseline levels, of which cuts and quotas are decided, have been the bone of contention within OPEC+, stalling talks amid UAE pushback in the summer of 2021. Overall, US sectors were mixed overnight. Real estate was the top performer, whilst communication services was the worst. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.1% gain. Thank you for listening.